Welcome back. I'm here today with Dixon Doll. He's a Silicon Valley venture capitalist, been around for many years and many successful companies. Dixon, welcome to today's show.
Nice to be back again.
So now, Dixon, earlier this year, you went emeritus from the venture firm DCM Capital that you found. What have you been up to since that day?
I've been up to a lot of things. I had deep involvement in DirecTV, where I was on the board at the beginning of the year, and so I needed to spend time to help complete the sale to AT&T, which we did successfully in July, and one of the largest media transactions that's ever been done, and it was very exciting to be involved in that. I've also been doing a lot of angel investing, and I'm spending a lot of additional time on some of the nonprofits that I've worked with closely, and cleaning up a lot of investment details and personal matters that were long overdue, which I didn't get a chance to do when I was working three jobs like the NVCA and DCM and other things a couple of years ago.
Well, if we look at the state of the industry today, what are some of the current trends happening in venture capital?
I think that everybody would agree that we've recently been in a frothy period. I'm reluctant to call it a bubble because it doesn't have many of the same aspects of the true bubble that we had back in the year '99 and 2000. But one of the things for sure that's happened is that there's been a fairly sharp fall off in kind of traditional IPOs in the last 6 months, and there's been an artificially large number of private companies that have achieved valuations north of $1 billion, the so-called unicorns. I think that they're going to have to rationalize at some point in time. Nothing happens in this industry where you can have everything reverts back to normal at some points in time. So some companies that are up there in that unicorn world now will grow into it, and if they do and their business fundamentals justify it, then they can retain that, and they'll probably be well advised to actually go public. And then that's certainly an external validation of the reasonableness of the market capitalization for such companies. I think some others are going to get squeezed, and there'll be down rounds, and some of the later stage mutual funds that have worked their way into these private holdings, they'll be protected because they negotiated full ratchets and price protection on the downside, and the people who will get screwed are the founders and some of the employees and the earlier stage investors. So there's no such thing as a free lunch here, and everything will come back to reasonableness at some point in time. I just hope that it's not a calamitous door slamming shut thing, and I don't think that that's happening. But there's certainly been some corrections that I think are probably pretty healthy. I think this year is going to go down as one of the years when a huge amount, maybe the most money ever raised in a single year for new venture capital funds, is happening, and there are a lot of very exciting and interesting new technologies that warrant the continued investment in new funds by proven and well-talented fund managers.
When you look at the trends out there, and of course a lot of money looking to be invested, but do you see any industries that seem to be stronger than others?
Yeah, this is not a complete comprehensive listing, but certainly personal health and the on-demand economy broadly defined. I was just with one of the Uber investors yesterday, and taking this concept of on-demand and applying it just far and wide across virtually every industry that you can think of right now. And that's a truly transformational development. There's the whole explosion in mobile is widely known, and mobile apps, and the whole idea of developing brand new companies that are built to interface to consumers, and the globalization of the industry, so that this is happening not just in the U.S. or in China, but it's happening everywhere. India is a huge up and coming factor. It reminds me in many ways of what we experienced when we were starting up in China at DCM a few years ago. So there's some geographic hot areas and some sector hot areas, and these are just wireless and the convergence of digital media and traditional telecom networks. If you look all over the world, you'll see carriers clamoring to innovate, to change their backbone architectures, to cloudify them, getting rid of a lot of the physical infrastructure that they've relied on for many years. So it's a time of tremendous technological change and innovation. And these are just a few examples of it.
Dixon, I'm running up against the break. We take a quick break, and we'll be right back after these messages.
Okay.
I love fishing, with my family.
I think it would be easier to use a net.
It was so much fun.
The times when we are together, it makes it all the more worth it.
Having Dad teach them how to cast a fly rod, and
as long as we're doing stuff together, we're having fun.
Some people see a father and a son fishing together, while others see a succession plan.
Welcome back. I'm visiting here today with Dixon Doll, and in the first segment we're talking about trends in the industry, and I want to touch base on life science. What's happening in the development of new companies there?
I think that life sciences is in the kind of the most dynamic situation or form that the life sciences venture industry has ever been in. I'm not an expert in that area, but I've been close to the industry, and I worked in a firm that had a life sciences component for the first 10 years of my venture career. And one of the biggest things that's happening right now is that the whole idea or the concept of big data, in which we have all these sensors tracking and tracing the experiments that get conducted as new drugs are being developed, and then they try them out on patients. And rather than have to be qualitative in the determinations of how things are going there, it's possible with big data and data analytics programs that are optimized for the life sciences industry to really have a big impact, and to cut through a lot of the inefficiency that that was prevalent in the industry back 5-10 years ago, when we didn't have big data as a tool to to really use it. I mean, there are all these new drugs. You can't watch Bloomberg or any CNBC, any of these things, without hearing about some big story about some blockbuster new drug. The M&A market in life sciences has been soaring, and it's very international. You have some of the big global pharma companies wanting to to exit the U.S. For tax advantages, and I mean, just a lot of different things going on there. And I think it's all going to end up being very positive at the end of the day. But I think, I went to the J.P. Morgan Health Conference last year, which is one of the big industry get-togethers, and I'm told that the audience this year is going to be even bigger, and it was very big and very active and vibrant last year.
So, Dixon, recently there's been these drones in the news that government's coming in and registering them, and the sector as a whole, is it up and coming, or what's your perspective on that?
I think it's definitely one of these new sectors that people are going to make investments in, and this is always a challenge when you get into a new area like this that has potentially significant downside consequences if drones fly in the way and get in the way of public aviation. I think very big application for drones is going to be in the agricultural area. Helping measure and take photos and just observe, and in some cases maybe even plant seeds or whatever, replacing some of the older ways to do it. I mean, there are a couple of examples, I think, of firms that are starting special purpose drone funds. I think it's going to be big all over the world. But the government for sure has to come up with some pretty ironclad rules that will make sure that that drones don't fly in places where they can cause considerable damage to to the regular commercial economy and threaten the safety of airline passengers, etc.
I've been visiting here today with Dixon Doll. Dixon, I need to take another break, and we'll be right back after these messages.
Okay.
Since you can't take your wealth with you, spend time with your family. Welcome back. I'm visiting here today with Dixon Doll, and we've been talking about the venture capital industry, new company creation. We touched base on the life science and the drone industry. I want to move forward though and transition into, in today's environment, what are some of the hindrances of the industry or company specific that people are facing in trying to scale and grow?
The one that comes to mind, I think most people would probably agree with this, is that there is at least certainly here in Silicon Valley, there's a pretty severe shortage of talent, of engineering talent to develop these things, and everybody sees the consequences of all of this, upbeat activity and and congestion and traffic patterns. That's always been one of the things that I watch as a measure of the the health and vibrancy of the venture industry, and by all measures, we're in a boom time right now in that regard. But if you go down underneath the surface, it's hard for companies to recruit. It's hard for their employees to find affordable housing, and so the consequences of these things, real estate values skyrocketing. Consequences of these developments are that companies get forced to set up, remote locations. It's never as easy to build a great company when you have multiple locations, especially startups, where the whole team needs to come together very, very often and very frequently. You might find this surprising, but I also think that one of the obstacles to the venture industry today is this unicorn phenomenon that we were talking about before, where people, especially entrepreneurs that are not sophisticated and haven't been through it, before, they want to raise as much money as they can at the highest valuations, and they don't necessarily appreciate the importance of having the company have enough. It's a delicate balance of having enough capital to build the product that's going to allow you to get into the market and start generating revenue, with the availability of capital at a very inexpensive price, especially in today's economic environment. But as somebody who's gone through these cycles, I don't think that it's realistic to assume that this environment is going to last indefinitely. And there'll be a rationalization. Things will come back together, and these are when things get more in balance, it's easier to recruit good people to help start venture-backed companies and build teams and things like that.
I want to transition over to when you're putting money into a company, or when you're trying to make the decision, do I go with this person or not? What attributes do you look for in a CEO? or a person that you're signing up to lead the company?
I think, I always like to meet people that are grounded in reality and that have a passion for winning, and this is in no order of importance. These are all important. They must have high integrity and character. I think I like to see somebody that's very self-confident, yet not maybe even a little cocky, but that is not arrogant, and that's grounded in reality, as I said, and somebody that really has a passion for winning and has a vision on where they want to take the company and how they're going to be successful in all the things that they need to do with the help of the investors and the board members and the employees and all of that to go out there and really create, I'll call it lasting, enterprise value.
Have you seen a change between the millennial generation versus the previous generations you were working with on their leadership style and their values and really what's driving them to solve the problems of tomorrow?
Absolutely. I mentor some students, over at Stanford, in the Institute for Economic Policy Research that you know about, and these young people today, I mean, they're certainly millennials, and some of these kids are just they're mind-bogglingly talented, and they're filled with energy and vim and vigor, and they have visions about a lot of these new technologies that they understand them, things like virtual reality and social networks, and they've grown up on them, so they're kind of an active part of their training and an asset that they can use in helping build their companies and make them successful.
When it comes time to team building, which is an important part of scaling companies, is there a certain process that you look to, or in how to build good teams?
Well, I think it always starts with the board having a close relationship with the senior members of the executive team, and the way I've always done it is, you have a big master plan that's good for 5 years or more, or maybe it's only a 3-year plan, but then you get together with the team at the beginning of each year and set out work in a collaborative fashion to get agreement on the milestones that you want to achieve. And hiring decisions are considered to be very important, and you retain the outside services of a search firm or search firms on many occasions, but you got to get on the same page, have the management and the board be in agreement about the profile of the next most important team member, and then the one after that, and the one after that, and so on and so forth. And that usually produces pretty good results. And the other thing is that if you ever make a mistake, or the CEO in hiring or whoever makes a mistake, the really good ones, they figure that out quickly, and they move to cut their losses and make a change. And that's another attribute of a great entrepreneur as well.
We're visiting here today with Dixon Doll, Silicon Valley venture capitalist. Dixon, I need to take a quick break, and we'll be right back.